almost immediately. Now, a lot of these investments are being announced from all over the world. And again, what Trump said, you can sell anything you want to Americans tariff-free, just build it here. Well, they are. They're Taiwan Semiconductors building when I say multi-billion, we're really talking like $20 to $40 billion semiconductor fabrication plants in Arizona, Oregon. Intel's doing the same. AMD, the UAE, Saudi Arabia, their Volkswagen. They're putting massive investments in the United States, and it's not just the investment itself counts as GDP, but it's the high-paying jobs that come out of it. There's a famous story, which is true, in the early 1900s, Henry Ford gave his workers a $5 an hour raise, or I think maybe $5 a day, but it was a $5 raise. And the other oligarchs said, "What's wrong with you, Henry? You're crazy. Why are you giving your workers a raise?" And he said, "I want my workers to be able to afford to buy my cars." And so you need, investment is great, but it creates high-paying jobs, which increases consumption. So there's a very virtuous circle there. You got to get it going. The economy could actually be pretty slow, maybe even to the point of recession this year, but that's the hangover from the Biden years. But then looking at 2026, 2027, we should be going great guns. And that's what happened to Reagan, by the way.
Okay, so that's a good point. So if you feel good about the tariffs, I know I asked you about debt yesterday and Ray Dalio's points, and
right.
You obviously don't agree with Ray Dalio, and you're not concerned about.
No, Ray's not thinking about it the right way.
You're not concerned about the debt. I want to know what is on your radar, though. Is there something on your radar that you are looking at in the economy, thinking, "No, that doesn't look so big"?
Well, as an analyst, I don't really think I'm good and bad. I just try to get it right. So one thing that's happening, again, so the dollar's going down. It's been going down for about 6 months. It's down against the euro, Swiss franc, other major currencies. That's just a fact.
The worst time since President Nixon.
Since 1973, and we all know what happened after that, which was the Petrodollar Accord in 1974. And that was involved in that in certain ways. So the dollar's going down. So here's what I would say. First of all, so from that, that's a fact, right? Like you say, you're entitled to your opinions, but you don't get your own facts. That's a fact. But what does it mean? So the narrative that's spun out of it is, this is the end of the dollar. People are getting out of the dollars. The end of the role of the dollar as reserve currency is the great reset. It's all nonsense. The dollar decline is being engineered by the Treasury. This is part of the Mar-a-Lago Accord that Stephen Moran wrote about last November. If you're up for a 24-page
on purpose,
on purpose, exactly. If you're up for a 24-page 8-point font technical paper, read Stephen Moran's paper. It's available online. But he talked about this under his Mar-a-Lago Accord. By the way, Danielle, the phrase Mar-a-Lago Accord was first used in my book Aftermath in 2019, Chapter 6. So I came up with it. But obviously, if you want to be 6 years ahead, check out my books. But Moran borrowed it. I'm happy about that in his paper. But that paper is not the only one, but one of the cornerstones of the Trump administration plan that we talked about earlier, that it does fit together like a Jenga puzzle. Now, when has this been done before? Twice. Richard Nixon, Henry Kissinger, Bill Simon, Jerry Parsky, and others engineered the decline of the dollar at the Smithsonian Accord in 1971, in December 1971. And then it played out over the following years. And, that's when gold took off. The Arabs were worried about it. And we engineered the Petrodollar Accord, which locked in the role of the dollar ever since. And the dollar's been up and down. But as the leading reserve currency that you need, it was a very simple concept, which is, hey, the whole world needs oil. So if you price oil in dollars, that means the whole world needs dollars. Simple transitive law. And that's, like I said, that's been true ever since. Now, there have been up and downs. When was this second time that the United States government engineered a dollar devaluation? It was 1985, James Baker and the Plaza Accord. In 1985, the dollar was at an all-time high. If you use there are a lot of dollar indices. There's Dixie and Bloomberg and Wall Street Journal. They use Dixie, et cetera. But there's the Federal Reserve Board has an all-country trade-weighted dollar index. And if you look at that, the all-time high was 1985. James Baker engineered the decline of the dollar. And how did he do it? We weren't on a gold standard. So with Nixon, you went off gold, and that started the ball rolling. The Smithsonian Accord, but Baker did it with the cooperation of, it wasn't the entire G7, but it was the five of the biggest central banks in the world. They met at the Plaza Hotel. That's where the name comes from, and they agreed to do it. So what you had was central bank, global developed economy central bank intervention to bring the dollar down. They had targets, and then in 1987 they met at the Louvre, and they said, okay, we did it. Now let's stabilize it. And then you had what they call the Great Moderation for 20 years, from 1987 to 2007, 2008, that's when Obama started a new currency war. But my point being, it's been done twice before. Ken Trump and Stephen Moran and others in the White House, Scott Bessent, Secretary of the Treasury, pulled this off for the third time in 50 years. Well, my point is, it's good. It's a good question rhetorically, but that's what they're doing. So don't fight the Treasury on this. The dollar is going to go down more. It's going to stay down. And for people to say it has to bounce back, this is not driven by the market. This is being engineered by the Treasury.
Well, let's end on this note. What everyone wants to know, if that's going to come to play, what does that mean for gold?
Well, what happened in the 1970s? Gold went up 2,700%. And one of your esteemed panelists, Frank Giustra, made that point yesterday. So gold's going to go up a lot. It does it in stages. I would expect $4,000 an ounce by the end of this year, 2025, but much higher in the years to come. If you just took the two great, there were no gold bull markets before 1971 because the world was on a gold standard. Gold didn't go up or down. I always tell people, if you want to make money in gold, don't root for a gold standard because you can't make any money. But from 71 to 1980, gold went up about well over 2,000%. From the other bull market, 1999 to 2011, rather, it went up about over 600%. So if you just take a simple average of those two bull markets, you would say that this has two things. This has years to run, and gold doubling is nice. I love it, but it's probably going to go up maybe 5 or 10 times. So you'll see gold in well over $10,000 in the not too distant future, but short run $4,000.
I truly appreciate you stopping by. Most importantly, are you going to be giving us a gift of a new book soon?
Great question. My most recent book came out last November. Money GPT is doing very well. It's on artificial intelligence, but artificial intelligence as applied to capital markets, banking, and I also write about national security and nuclear war fighting and talk about a lot else, but hope people enjoy that book. I'm kicking around some ideas. I'll talk to my agent and my publisher, but maybe this time next year. But I've got a few ideas I'm working on.